should be going now.
The icon.
Let's see. We should be live. Shows me
I'll get my
uploading.
community onto it. You
Still
sent me
has
the
the
link
poll.
to the Zoom. Do you have the link to the YouTube?
You know what? I put it on your LinkedIn. If you look
Oh,
there.
okay.
Hey, we're live.
go.
There we go.
We are
It
live.
just took a
I
second
see
there. We're starting to look
All right.
professional at this, guys. Maybe this is our shtick, though. I kind of like the comedy of just kind of haphazardly starting this thing.
Well, yeah. I mean, other podcasts start on time. Our differentiator is we
Yeah.
don't.
That's right.
Makes us cool.
Hey,
All right.
All right.
we're as random as the charts, guys. No, the charts aren't random.
We are. So, all right, we got another great show today. First off, let's start off with the market. I've been watching it the past couple of days. I've been in the ETF conference in Vegas. Sucks to be me, I guess, but I'm back.
Where did you stay, Matt? What hotel?
Yeah, I stayed at the Virgin. That's where they had the event. It's the old Hard Rock, and it's
Out there. It's way out of the way, man. I used to go there all the time, dude. It's just way out there.
way out there. You know what wasn't happy about that? They only had one table with a normal deck shoe for blackjack.
Right.
They had the 2 deck. I get my butt kicked playing that. But a
Right.
normal deck, I'll win money every time. The worst part about it is they didn't have a coffee maker in the room, and Dunkin' Donuts didn't open until 6 a.m. So, I mean, I'm up at like 4:30. I had to go an hour and a half every day without coffee, which was not a pleasant experience.
So you couldn't step outside and go over to Walgreens and get like a coffee to bring in the room. That was like just too much for you, kind of thing. Like
I
regular
mean,
people.
Yeah, pretty much. I'm kind of lazy like that.
Can't go to Walgreens.
I
You
actually-
would never go to CVS on the strip,
But
right?
honestly, didn't
No.
even think of that. Yeah, I mean, I don't know if we were near something, but
Oh no, actually over there you're not. That's the problem. There's
yeah.
nothing
all right.
over there.
So then I was.
My
Then I
bad.
was.
All right. My bad, I'm out. All right, sorry. guys.
It's all
All right.
good. Love
I
Vegas.
love Vegas, by the way. I'm a
Same.
Vegas guy.
I do too. It's a fun place. We almost didn't make it out alive, but I did. That will be a story for not the
All
podcast.
right. Yeah. All right.
I can't wait to
Yeah.
tune in.
Yeah. I didn't. So yesterday, I think, was the second worst day for AI this year. First was obviously the DeepSeek news. A lot of stuff coming down the pike. Another story out of Cowen that Microsoft is going back on some of their data center stuff. You had China saying, telling their companies not to use NVIDIA's chips. So, a lot of bad news for AI. S&P went below the 200, or SPY went below the 200-day moving average. Now it's trying to inch back. All right. Now it looks like it wants to go negative.
I was gonna say
So-
it's starting out looking like an undercut and rally for you, but it's
Almost,
Yeah.
but not exactly. We're fighting that 200-day right now. Oh, and Trump announced a 25% tariff on autos. So that ought to be interesting. I mean, half of my stuff is green, half is red. Half my shorts are green, half my shorts are red. So yeah, I mean, I think caution here until SPY can get back above the 200-day is my thought. Jeremy, what about you?
I think you're right on there. We're going to be struggling there for a little bit, but there's a lot of cards in play here. This is more news heavy than usual, and throw the tariffs in there and add automotive to it. I've had a thesis that GM's going to be a pretty big loser in this if we start doing that, and it started selling off pretty hard yesterday.
And it's selling off pretty hard today, right below the 200-day.
Oh.
I always smile when I get to short GM. It's like getting my tax dollars back from the bailout.
Why is tariffs bad for GM? Because parts, is that it? The parts, or you think that would hurt their
I'm
all the
gonna
stuff coming in?
I'm gonna point at another channel called Connecting the Dots. And if you want to learn a lot about GM and all of the stuff that they're pulling with us, they're basically a Chinese company now, and the only U.S. presence I can see is really just so they have a market to sell Chinese cars in America. go
got it.
do a deep dive. You'll see some fun stuff in
I
there.
got it. Okay, my bad.
So I think
Thank you.
tariffs are definitely
the-
going to hurt GM.
There was a really good report that came out from B of A, and they highlighted all the cars that are going to require 25% tariffs because they need to be imported. All the electric car manufacturers have domestic production, so they will not be charging any or bearing any tariffs on their products. Tesla, Rivian, Lucid. But then you look at Tata Motors, 100% imported. Geely, which is a big Chinese manufacturer. And then GM is in the middle where they import a lot from Canada and Mexico. 50% of their cars are from the rest of the world.
Wow.
Yes, sir.
There you go.
I mean, there's
So-
even some stuff about them rebranding or putting the GM logo on a car that's straight out of their parent company in China. There, I think it's SAG. I can't remember the name of the SAG, whatever the company name is.
There's
SAIC,
Yeah.
Shanghai Automotive something
They
company.
literally
there's
swapped the
something-
logo.
Investment company or something, yeah.
There's something floating around on Twitter where someone in their car was taking a video of a Cybertruck that was driving down the street, and the guy had slapped Toyota on the back of it. Yeah, so when we were talking about rebranding, I got a kick out of that.
That's awesome.
That's good.
And I mean, as silly as it sounds, that might be enough deterrent. I mean,
I don't think so. I think everyone knows.
Probably.
Maybe some of these protesters aren't smart enough. They don't know a Cybertruck from anything.
maybe they just sort of fall into the gap and do what they're told.
My kid has this thing where he counts Cybertrucks wherever we go. He just started doing it. So wherever we go somewhere, we went into like Beverly Hills last weekend. He counted like 32 Cybertrucks. So, they're out there, man. They're out
Does
there.
he punch you every time he sees one?
I remember that game.
I do too. Punch
Arm
buggy
is
right.
Still sore. Oh, see, I was a middle child, so I got both bigger siblings beating on me from that one.
All right. Well, let me introduce Stefan here, right?
Introduce
Okay. So
Stefan.
this is Stefan Rust. Okay. So interesting guy. He has a couple things going on here. Trueflation. So it's like Trueflation is something that he's famous for. Matt's nemesis, Kathy Wood, is a friend or is a sponsor of.
Not mine. She doesn't like me. I have no issue with her.
But you started an anti-Kathy Wood fund a couple of years ago, correct? So
It was the second top performing non-levered ETF in the country in 2022.
Okay.
So nothing
So-
against her, but there you go.
Okay, but here's what Kathy said, giving her some props here. Kathy says, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. We could see 2 to 3 rate cuts. So let's start with that, Stefan, right? Because we're going to go into crypto in a sec, and I think that's where we want to spend all the time. But I just want to talk about this real quick, yeah? So
inflation's important.
it's important.
We can
Okay, so we don't have to.
on inflation.
All right.
Yeah.
My bad. All right, cool. So, it's interesting. So here's Stefan's inflation chart, and this is about 2022-ish, where he has it like over 12%. And then it took a pretty deep dive in 2022, 2023, 2024.
Pat,
Yeah?
one thing I just want to let you know, when you have a blurred background
Oh,
and
that
you
doesn't
hold
work.
up a chart, it's
Oh.
very
Sorry,
Yeah.
dog. All right. Well, anyway, so he was at like 22. He was around 12 and change in 2022. Came down to about 2-ish in 2023, and now he says I think it's around like 1.5 or whatever. And it looks like you think it's going lower, which is shocking to me because I feel like burger prices are going through the roof. So let's talk about that first. Yeah. Welcome to the show, Stefan.
Yeah, thank you. Thanks for having me, and glad to be here. And here's the site. Here you can see. Over the last 4 years or 5 years, we've experienced, some 26% of inflation in aggregate. So your dollar today buys 75 cents worth of goods that it did with $1 in 2020.
All right. And I just put the site up, by the way.
Oh,
And so if
great.
you
Thank
go on year,
I thought
you
that was
can then
Stefan that
see-
did that. I'm like, wow, that was cool. How'd you do
Vaughn
that?
took control of our Zoom call.
How'd you do that,
Yeah,
dude?
this guy is smart. How do you figure that
I
out?
literally was thinking this in my mind here. Like, wow.
I'm over here making the
I
image
wasn't
fit.
processing this actually. All right. I didn't want to say anything.
Yeah, I think just from your perspective or what you mentioned, we peaked up at nearly 13% at one point. Didn't quite break 13%. We're 45 days lead time to where the government numbers are, the BLS numbers are, which gives us an indicator of where things are going and how you can ultimately make investment decisions based on that. We floored back in March, sort of at 1.3. We're now slowly creeping up again to 1.8%. And bear in mind that these prices compare to the same time last year. And so we saw a lot of appreciation of prices over the last couple of years. And so what we're seeing right now is that the price leap across the board of sort of all the 12 components or categories, as we call them, have increased by only 1.6 or 8% since last year. So if you hit the composition tabs, you can then see we break everything down into 12 different categories where we have the housing, we have food and beverage, we have transportation, utilities. So we track it slightly different to the way that the government tracks it. They exclude housing and food, for example, which are some of the most important categories. We like to have in there and separate.
You would think, right?
Yeah.
That's my
Yeah.
argument, right? You would think. Yeah.
So they call it core, and then
Who
core
needs it?
CPI and CPI.
Do you
It's like,
strip out eggs from the food and beverage?
yeah, we keep the eggs in there. The eggs are included.
All
But
right.
eggs have been dropping radically. I mean, we have eggs
That's what
inflation.
I
I
heard.
think that's going live now.
Well,
too.
dude, I actually go to the grocery store. I'm sure I'm like you guys, and egg prices have not come down at my local Ralph's. I mean, I literally look every day. So, they haven't come down. I mean, I don't know how it works, but it's like 9-ish for a dozen eggs. And if you go like anything brown or that wasn't raised in like a farm with a million other, chickens, that's like $11, $12.
Wow.
Over here, it's coming down a little bit. I did notice yesterday that the mayonnaise index that I created out of nowhere actually turned bullish yesterday. So companies like CALM actually look pretty decent right now.
I will say something, Stefan. I don't mean to take your moment here, but I just got to interject. So we had a podcast a while back, and I thought I was like this genius creating the what was it? The
McDonald's, Big Mac.
McDonald's
index.
breakfast sandwich index,
Okay.
and there already is one. There already is one. A guy
Oh,
at
wow.
Bloomberg has one. Like it really was a bad dude. All right, so keep going, Matt. You got some questions, I'm sure. Go, please. I don't want to.
So, just so I understand, and sorry, Jeremy, I keep moving back and all right. Now
No, you're good. I'm
so
fitting
the
things.
inflation index right now, you've got in the U.S. 1.8%. That's monthly.
That's monthly, yeah. The yearly, sorry, year on year. We only contrast year on year. So how much
Year
was
on
it?
year.
Yeah.
So you're saying right now the inflation percent is 1.8,
Yep.
and the government is saying it's more. So you're showing it as less.
Yeah. Well, the government we track it daily, right? So we do every single day. And the government right now is at 2.8%. They report it monthly. Their last report was on the 13th of March. And obviously they use data that goes back 6 months, in some cases 8 months. So they're using sort of house pricing, housing and shelter, as they call it. They're using 6-month-old, 8-month-old data sets. And so it's just not relevant anymore. It's just so out of date that they'll go back. If you go back and look at the BLS numbers, they'll have edited the numbers for November and changed them and revised them either up or down because they got new numbers in that they didn't have at the time.
So then what you're saying, the Fed is always out there saying we want to get inflation under 2%. So what you're saying is they did. Mission accomplished. Inflation is gone. Wow.
I don't
we
really
track-
get it, man.
we
You know
track-
what? I really have a
Yeah.
hard time buying that, but I'm going to defer to you. I mean, honestly, you obviously see, it just like it's mind numbing actually a little bit. It'd be great.
Is that
Yeah,
Which then also theoretically means if the Fed agrees with you, we're getting lower interest rates.
yeah, soon.
yeah.
Can I ask you a
if you
question?
listen to some of
Just-
you listen to some of the analysts, what they're saying is they're now predicting interest rates to come down faster. You know, I think Danielle DiMartino Booth, she just came out and said that there might even be an out of FOMC meeting drop in interest rates. The U.S. Well, the government needs to refinance some $6 trillion worth of bonds in the next 12 months.
Yeah.
They do not want to do that at 4.5% because that's going to sort of just offset all the savings that Doge has tried to achieve. All of a sudden, we got to pay more in interest rates on the loans that we got. So they're going to do everything they possibly can to bring that down.
Wow.
Serious question. Does the government really even care about money? I mean, we're at 4 or 2. I mean, does it really change things? A trillion there, a trillion there. What's the difference? No, right? Or
So-
is that just obnoxious to say?
No, it's a super valid question. I think on the one hand, you definitely need to look at money. I think you need to virtue signal that you're looking after the money and that you need to portray to the market that you continuously have the ability and the obligation. You will stand up to your obligation to repay any of the outstanding loans. I think the metric today has shifted from how much you have and how big your debt is to how liquid is your currency. The more liquidity you have your currency, the more faith people have in your currency. And so to me, there's no other currency than the US dollar that has that depth of liquidity and trust in the market, mainly because it's just the most transparent.
Do you
Good point.
And if you don't,
Good
I mean
answer.
we can skip it because it's a rabbit hole. But you get are you familiar with modern monetary policy, and do you have a
Yeah.
thought on that?
Yeah, I mean, in theory, it's a good it works. I mean, mentally, I think in theory it works. In
Yeah, I mean
practice,
mentally
just don't-
it makes sense, but
Yeah.
nobody. But then again, if nobody accepts it, then
We
Does it
explain it to
matter?
the lesser informed, like me and the rest of the people that are watching the podcast, Matt.
yeah. So modern monetary theory states that deficits don't matter because the government can print money. So the only reason that deficits matter and the only reason you can't print unlimited amounts of money is inflation, which is why I brought it up, because we're talking about inflation. And taxes, because you can print money, only matter because of inflation. So it's interesting as someone who thinks I'm overtaxed, and when they're always, the billionaires got to pay their fair share and all this. Well, do they really? Again, the government can print money, so really the whole idea is monetary policy should just be designed to keep inflation at 1.8%, and nothing else really matters. Stefan, did I get that?
Where does
right?
taxes
that was-
come into play? I don't really follow the tax. Where does taxes lay
come
into
into
this?
play that if you have too much money, that's going to cause inflation. So I've got to manage the basically.
That's good, man. That's out
Yeah,
there. I
so
think.
basically there's a
I like
limited
it, though.
supply of money, and it's either in the government or in the private sector. If too much is in the private sector, we're going to have inflation.
I
So
get it.
taxes
Yep.
move it from the private sector back to the government to stabilize things.
Wow. This is a new one. I thought I knew it all, but I guess I did.
So basically, I can print as much and then I offset that against what I take in, which is the taxes, right? But if you can print as much, who cares about the taxes? Why do you even need to charge taxes? Why don't you put them onto other areas? So you don't charge income tax, you charge sales tax. You take money out of the system through other means, not income tax. And we did a study talking about taxing the rich. we did a study, and the team looked into, this was a while, I think end of last year. The UK saw 10,000 millionaires leave the UK because of taxes going up for millionaires. And as a result, what we looked at is, okay, if they would have stayed in the country, how much additional income from tax revenues that everybody's saying tax the rich, how long would that last, and how would that impact Treasury in the UK? Wow. And then we found out that basically it wouldn't even cover a week's worth of government expenses,
nope.
Even if you manage to achieve the taxes. So it hurts your economy far greater than it actually helps the economy.
Yeah. And just one caveat, the guys who came up with modern monetary theory did it to justify spending for the Green New Deal, which exactly. I'm not a fan of. But certainly, some of the ideas make, the math makes sense.
Anyway, I don't think it's the right way. I think it was a way to just print more money and justify a rapidly growing OPEX. None of us can do that. I mean, I can't just go and print out money.
We still can. It just won't. Right. It just won't look really good, and you'll get arrested trying to use it. But you can do whatever you want.
Yeah, that's true. That's true. Nobody's going to pick it up, though. Yeah.
Still a free country, but there's consequences.
Yeah, exactly.
Have you guys ever seen that movie about with Steve?
Legally, you're not allowed to print your own currency.
Right.
So if I need to, so until this new administration, it's been really tight. I mean, we had Gary Gensler putting everybody in jail that actually tried to do anything, creating wealth outside of the Treasury.
Good point. And I also kind of take a little weight against the massive consumer debt that needs to have a bubble check pretty quick here. And, people are pretty much at their limit. And the only thing that can really see this, because we were looking at the housing market with this as well, like people can't, they're priced out of the market. And at this current rate, also with inflated house prices, starter homes are unattainable for most people. The only thing that can maybe save that is the rate comes down quite a bit. A combination of B, maybe the market's flooded and the price of houses comes down a little bit. But the other thing was, the idea of, well, if we abolish federal income tax, does that provide enough disposable income for these people to now have access to that housing market in spite of the high rates and in spite of the inflated prices? So you weigh that against how much liquidity is in the market, and that's where the buck has to stop, so to speak, because either you have money available in the monetary system or you have money available in the private sector, and you have to be able to balance that. So I got to wonder where the line is.
Can that bill get passed? I mean, does that require like the Senate or the House and all that to pass like a no income tax thing, or can we just do it, or is that even possible? Matt, this stuff.
Pat, we can't just do it.
Oh, we can't.
No.
I mean,
I'm serious, dude. I'm actually asking a serious question.
Call your Congress. No, there's so much, infrastructure, all that. Yeah, I would assume it'd be an act of Congress, but no way they're going to pass.
It's not going to be overnight.
No income tax.
Okay. All right. So I'm going to ask you guys a question. Have you guys seen the movie Papillon with Steve McQueen, where he goes to prison
100 years ago?
Yeah. So like on a scale of 1 to 10, what do you think? I'm giving it like a 10 and like a 9.5 in my book. What do you think, Matt?
It's been so long. I don't know.
It's not
one of those movies I've seen 10 times, so there's got to be a reason.
That movie. It was definitely 9, 10. I would give it up there as well.
What about you, Jeremy? You know the movie?
Classic.
I haven't seen that for.
Well, Dustin Hoffman played the dude Louis, right? And he was like, he wrote fake money or fake bonds and all that. What do you call that? I can't even think of the word. And that's why they collected all those butterfly ink so he could make like the fake bonds or whatever. It was great. So that's a segue to crypto, right? Get it?
Yeah, I was saying, let's talk crypto. So
good segue.
Yeah, right.
I mean, how does this all relate now to crypto, stable coins, all that?
So you're looking, we talked about the debt. We talked about the need to refinance a lot of the bonds that the government has issued. And if you look at who's holding those bonds, local banks, of which there are about 3,000 across the US, hold about 2 trillion of those bonds. And so those bonds are currently generating an unrealized loss of about 300 to 500 billion dollars, depending where you look. But according to the FDIC, it's about 300 billion dollars in loss for the banks every quarter.
Wait, where? So back up for a sec. Where's that loss coming from? Are you talking about the banks?
The hold to maturity requirements, right? So they need to. What is they have to market to market, and it's underwater. However, at maturity, they get back the full amount, right? So it's
right. Got it. Yeah, right. Yeah. So one of, just so you know, I have an inverse regional bank ETF, and one of the reasons is, I mean, I think you've got a lot of regional banks sitting on ticking time bombs, and I want to be there when they start going under again with the only inverse ETF out there. So, all right, got it.
But what I think is happening, and what is genius about the Genius Act, which is Scott Bessent putting in place, where he's trying to create a stable coin framework for the banks, and for that to be governed at a state level, not at the Federal Reserve level. And what he's allowing the banks to do at a local level is to print and create their own stable coin off the back of these T-bills and treasury bonds. And so in essence, if I'm holding let's say $1 billion worth of bonds, I can now issue a stable coin and use at par the value of the T-bonds that I'm holding to provide loans, support local economy, provide businesses, enable payments, do settlements, using the stable coin that I have minted, using the dollar that I have in T-bond, in treasuries.
So it's like a proxy of liquidity.
So in essence, exactly. The banks would be issuing debt in the denomination of the stable coin, receiving interest payments in that denomination, originating securities in those denominations, et cetera, et cetera. It's what I think you're saying, or what you've said, I believe, if I understand, right?
Yeah. So you've already seen JPM. They've got a coin, JPM coin, JP Morgan. They've issued their stable coin. You see Vantage Bank together with Custodia issuing a stable coin using treasuries. Wyoming has announced they're going to issue their own stable coin using the treasuries that they hold. Who was it? Yeah. I mean, World Financial, which is, has announced they're issuing a stable coin as well. So you're going to see a whole new group of stable coins come into market, backed by dollar and printed by each of the local banks. And they're going to duke it out for getting market share, market dominance, but all of them are dollar denominated. So they're hot swappable anytime. And each of those banks will be regulated by the Oversight for Cryptocurrency Community or something, the OCC it's called. And so that, to me, is a great way to unlock liquidity, move away from the Federal Reserve, who's been defining interest rates and monetary policy, and give that monetary policy to the states and allow them and their banks to issue new currencies. Print money, basically.
That could almost be a swap for an ETF right there.
So
to keep
you
it
say
balanced.
here in this white paper you wrote, the stablecoin market currently valued at 280 bill is on track to be at 2 trillion near future, but some point here, I guess. Yeah. So that's pretty big now. And then what's the Genius Act? So this is, talk about the Genius Act for a minute. Explain that.
So that's ultimately a framework that Bessent is trying to drive to get. That's the Genius Act, the Genius move, together with David Sachs and the industry. They're trying to come together to find a way to, I mean, ultimately, it's also I think it's going to be the US's biggest export, right? The US dollar. All of a sudden, anybody can buy, I can buy a JP Morgan coin because it's tradable on some exchange at some bank, either through the Mitsubishi Bank in Japan, or it's given as a loan to a bank in Nigeria where they can then use that stable coin to give people dollar dominance. The beauty as well for the government is traceability. As long as it's on the blockchain, as soon as it's on the blockchain, I should say, all of a sudden it becomes traceable. I can follow the money, and you can trace everything and all movements to all the exchanges that matter, all the wallets that are out there, etc. So it's going to provide a far greater level of transparency in the movement of money, but it also is going to enable a lot of accessibility to individuals and retail consumers with the dollar, for the dollar.
But it's not going to be controlled by a central bank. Each bank will have their own. So like that whole central bank digital currency, I can shut you off if I need to. That can't happen because, okay. All right. Interesting.
But I'm sure there might be, you could actually blacklist, certain wallets. You could say this is a wallet that looks like it's with bad actors. I can blacklist that wallet. Any coins that went to that wallet.
But then again, you're not saying, hey, we're replacing the dollar with this. So, if you don't like my political beliefs and you blacklist me, I can still be trading dollars. I just can't trade stable coins.
Exactly. And in essence, it's competition, right? It's a competition for money, and the dollar stays the common denominator across all of them. And there's no central bank that decides who, what, how policies and program and codability inside the coin will take place. It's ultimately a competitive environment within a framework, which is brilliant, which will drive far greater adoption, will stimulate the economy, get a lot more growth, and ultimately will increase the dominance of dollar. Because if you look today, when I mentioned the $230 billion stablecoin market, 99.6% of that is dollar denominated already.
Right.
And so you've just immediately, as this expands, the dollar is going to retain dominance. And in a crypto digital world, it's likely to be even greater than in the fiat world where it's maybe 70%. All of a sudden, it will still retain, be up and higher at 90% market share.
So for the consumer, does this make it so if banks have their individual stable coin, it can be a little bit more competitive with rates, which would be a benefit for the average consumer globally?
Explain that. What does he mean by that? Because that was going to be my next question. Like if let's say I own a JP Morgan stable coin on my JP Morgan bank statement. I don't know, whatever you call it, right? One stable coin, $1. Am I going to get like a monthly little interest payment, or what is I'm going to have 1.001 stable coins at the end of the month, or how does that work?
Yeah, that would be possible because of programmability into the coin. They can distribute yield to your stable coin, or they can deliver interest to your stable coin. So they can reward you for holding on to their coin. They can incentivize you through means, like just giving you interest on your coin. So, yeah.
So, Matt, I'm going to throw you a curveball, right? If you why or why not could you hold a stable coin in an ETF? I mean, obviously it's not going to give you the alpha because it's not going to double overnight or anything, but wouldn't it be cool to have like a basket of stable coin generating income and kicking it out to mom and pop in an ETF?
I think right now so short answer is yes, that would be really cool. And I really want to do that. And I'm really hoping no other ETF issuers are watching our podcast.
Oh, dude, sorry. Why didn't you tell me that before? I asked you before.
I mean, the biggest issue is going to be the custody, because a typical, is a Citibank or a US bank going to be able to hold on to and value a stable coin? Right now, they can't do that on crypto. So all the crypto ETFs custody their crypto at Coinbase, and then there's a sub-custodial agreement. So there's that part. there's also, the pricing. You've got market makers who are making markets on these ETFs. With Bitcoin, we know real-time pricing on Bitcoin. If I have a portfolio of stable coins, you've got to have real-time pricing on the entire portfolio to be able to trade it. So, those would be the hurdles. But if you could get over those hurdles, I mean, I got to go out and reserve a couple of symbols before somebody else does. Because
All right, PATN. That's a good symbol.
why PATN?
Pat N.
Remind me, I've got one idea to talk to you about later on, but
Stefan. That's a good one.
I have a question though. I mean, does this give you a greater leverage when you're balancing on swaps for an ETF?
I
mean,
don't know, but
yeah, we can't get swap. I mean, we're not getting swaps on a stable coin would be much, much harder. I mean, I can't get, I mean, there's maybe one or two firms that maybe could give me swap on direct crypto. R2X stuff or swaps on ETFs. If there's an ETF out there already, then the normal counterparties are comfortable writing swap on it.
Right.
But you're not going to get, an investment bank to write swap on crypto today.
Yeah.
Down the road, sure, but not today.
So it's potentially going to be that balance. Cool.
I'm going to get in the weeds here a little bit. Just one question. So the Truth Network, right? Can you explain that, like, and what a node operation is, what data provision is, what government participation is, what reward distribution is, and elevator-ish pitch?
Yeah, I can do all of that in 1 minute. Yeah, no, but set aside.
I'm reading off your thing here, by the way.
What we've done with the Truth Network is decentralize the database. Historically, databases have been in one location, and you might have mirrored that across maybe two facilities in Amazon Web Services or Google Cloud or something like that. And what we've decided to do is make sure that we can, number one, ingest data sets across any of the databases that are maintained by a node operator. We have currently about 20 different node operators. They all maintain the databases with this exact same mirrored, verified data on there. And that's ultimately what the Truth Network does. It's an SQL database, so it's like blockchain or Bitcoin. It's just not using C++, which is the programming language. It's using SQL. So we're using Postgres SQL, which is the 90% or 80% of all databases are SQL based. So we felt that that was a programming language that people needed. And if we wanted to decentralize the data and not just give it to one powerhouse or one centralized entity, we could do that efficiently by spreading a common programming language that was flexible and that was used to managing high frequency data, and put that onto nodes that then have a consensus algorithm between them, which then verifies the data accuracy and the calculations using that data set that's hosted on those specific databases.
Matt got all that right, Matt?
No, but I'm going to ask a broad question. If we get adoption of all these stable coins, how does that change the way that, guys like me that's personal banking, but also have a business banking, how does that change how the banking system now looks to us, or does it not?
So there are two ways, and you brought it up earlier, custody, right? So who are you entrusting with your custody? There are two ways to do it. There is one where you trust, like a Robinhood, with the custody of your shares and with the custody of your money on the Robinhood, in the Robinhood app. They have a back-end infrastructure to maintain that custody, tie Matthew with X number of shares of Tesla and X dollars in that account as well. And then maybe leverage associated with that. So they are taking the custody for you. In the event of stable coins, You have two ways to do that. One way is you have exactly the same, you replicate what you experienced with a Robinhood, and you have that with all these stable coins and other currencies. And there are different blockchains that allow for different formats of currencies on those blockchains. So on Ethereum, you have, for example, ERC20, which is the format that most stablecoins are using. So Vantage Bank, together with Custodia Bank is doing the custody. Vantage Bank is using and issuing the stablecoin. JPM is working, I assume, I don't know who they're working with, but I'd assume Coinbase have a custody solution. So Coinbase is actually has a big custody business. All the Bitcoins that you buy in the form of an ETF is at custody on behalf of BlackRock at Coinbase. So that's what that ecosystem looks like.
Can I ask you a question?
then-
So this has
Yep.
this kind of Napster Apple vibe to it, right? So like, Napster, you're getting all these songs off the net for free, whatever, it's going to be us. But then you got to Apple and that was a whole separate, ecosystem. I'm not sure if I'm making the correct analogy, but my real point is this. Do you think people will be taking currency out of that ecosystem into like fiat dollars, or is this money always going to stay in this current, there are going to be all these ecosystems with all these sub currencies for the rest of, our grandchildren's lives or whatever. Like there's no more, hey, I got a quarter. It's like, my JPM, whatever, my Apple, whatever, Apple Pay is now JPM Pay or whatever, that kind of thing. I don't know if that all makes sense, but
I would do the analogy between Android and Apple, where a lot of the self-custody solutions might be a little more akin to Android, and then, and then the sort of custodian solutions are going to be more akin to, let's say, an Apple, where they're trying to bring Web 2-like internet experiences to cryptocurrencies with the sole purpose of tradability and exchange and payments associated with that. On the flip side, the utility associated with chains and the coins running on those, that all happens on a B2B basis. So if you want to settle, if you're using the blockchain as payment rails, there needs to be a settlement happening in the back end. And that's what the custodian uses, the local currency for that specific chain, in order to ensure the settlement and the adjustments in the respective addresses that are sending or receiving any of the coins on that chain.
So it takes the role of a clearinghouse, like for, when
Yeah,
you-
pretty much, exactly.
okay,
exactly.
so let me
That's a
back
very
up.
good
All right, so
analogy.
about a month ago, Matt and I were talking about this, that like In-N-Out Burger out here, they're like the biggest burger place, right? They
Yep,
said something like, we're going to start taking Bitcoin, or we might, or, as they pitched it. So, right now, could that work? And I mean, it feels like that can't really work. So is what you're saying the JP Morgan, altcoin is going to replace, and you could go into a McDonald's and buy a burger with your JP Morgan, coin, or no?
So before I launched Trueflation, I was the CEO of Bitcoin.com, and I scaled that to 20 million wallets and about 500,000 merchants. And what we found is that very rapidly, from about 2018 onwards, people were less willing to pay in Bitcoin because they didn't want to be that person that spent 10,000 Bitcoins to buy 2 pizzas.
Right.
And so
Warren
that's
Buffett's
where
kid, right? Or something, somebody like that. No, that was Berkshire. All right, you sold the
Yeah,
Berkshire,
yeah.
not the Bitcoin. My bad.
There you go.
Wrong guy.
But yeah, and so in essence, people were looking for a bit more of a stable currency to do an exchange and swap with. The centralized exchanges, so these custodians that were allowing you to trade Bitcoin with other currencies, were allowing the swap and doing the clearing between these Bitcoin and cryptocurrency exchanges using stablecoins or digital dollars. And that's where Tether was born. in a decentralized finance world, Tether was originally set up on Bitcoin, the blockchain, and was using Bitcoin, the blockchain, as the settlement layer or the clearing house or a clearing chain, if you will, or switch or ACH network. Swift, I think it was called, yeah. And then DeFi came along, and boom, we had programmable money. And then USDC came along, and they leveraged Ethereum as the primary source to do the settlement between decentralized exchanges. And so that really came about as the second form of programmable money. And Tether then since obviously realized, because costs on Bitcoin became too expensive for doing the settlement, they moved very quickly onto Ethereum because the costs were really low over there. And that then grew. So you can today pay in Bitcoin and automatic, no problem. It may take a while to settle, or you're building these layer twos, like a box, or Marcus Evans, he's got another, I don't know what his company's called, but their Lightning Network, that are trying to enable POS systems that do and allow payments in Bitcoin. But I think you'll find not many people want to pay in Bitcoin. They want to save.
Well,
their
okay,
Bitcoin.
wait. So do you think in the future stablecoin is going to be the medium of exchange?
Yep.
That's a yes. Okay, good.
Yes.
All right. Okay, good.
Because
Go ahead, Jeremy.
But then backed by dollars. I mean,
Right.
the dollars
Yes.
isn't going anywhere.
I mean, the reason
Or
is
backed by, you'll have maybe, I mean, somebody will come up with a gold-backed stable coin. You
Right.
know, where they're
Total Stablecoins Inc. I like it.
Yeah,
there you go.
I do.
You've got, there's Nuon, which is a stable coin that's backed by a basket of oil, gold, silver, S&P 500, and other assets as well.
Right.
I see the reason for it, because I mean the
Wow.
utility of a coin is going to hinge on its volatility too. I mean, Bitcoin's all
Exactly.
over the place price wise. If you have a stable
Yeah.
coin, you can actually have something it stores value, but it's not so volatile. If you go and pay in Bitcoin, 1 minute it's worth $87,000 a coin, and next minute it's like 72. It's like, well, wait a minute. Where do we deal with this discrepancy if I'm going to use that as a currency to purchase something or even sell something? So it's got to have its own sort of balance. I guess it does write its own checksum in real time, but how does it maintain stability? Well, stablecoin. That makes
All
sense.
right, I'm going to read something here. World Liberty Financial, the decentralized finance venture backed by President Donald Trump and his family, has launched a stable coin, right? So, I mean, I love Trump, by the way, I really do. But like, so a president can launch a stable coin? Is that like, how does that work? Matt, let me get your take on that first, just because I want to hear what you have to say.
So
I want to hear your jaded viewpoint first.
yeah. And remember, there's Trump, and then there's the Trump family. The Trump family still has, they still have a business. I think politics and the private.
Isn't this like Michael and Vito Corleone? Isn't it kind of the same thing though now?
I mean, to an extent, but I think there
family.
are so many conflicts of interest in politics that, should there be? No, there shouldn't be. But you can't just pick out one. Look at Nancy Pelosi and her trading, and and all the other Congress people. Look at how wealthy people in Congress are when they're only making, $200,000 a year. There's so many conflicts of interest. It's tough. Should Trump be tweeting out about the Trump coin? No. He shouldn't. Should he be trying to get you to buy Tesla stock? Probably not.
I did that first, by the way.
What's that?
I was the first one to do that on our very first podcast. I pitched Tesla way before Trump ever did.
You were on it.
And Tesla's come down a lot since then, so
Yep.
you won't be pitching any.
No. I pitched them. No. I said the stock was going lower. But I like the car, is what I said. So let's get this from a European perspective, Stefan. When I'm sure, all the people in Switzerland and Germany are going like, "Oh yeah, Trump just said he's a stable coin. That's cool." I doubt that's what they're saying, right?
I mean, I don't really listen too much what they're saying. I think, look at what they're doing and how they're feeling, right? I think that's a lot more an accurate way of taking a look at the market. To be honest, I think what Trump's doing with the stable, it's USD1, they're going to have it dollar backed, right? So they're going to have to buy treasuries to be able to support that dollar in the marketplace. So I don't think it's a bad, everybody should be able to be an entrepreneur, and it's not actually Trump himself. I think it's maybe one of his sons running it, and he may have shares in the company, but ultimately the framework is public. They're not the first one to do this. There are a number of other companies doing this. So I think that's okay. I think they are taking advantage of the Genius Act, which comes up in Europe terms. They have the counter regulation, which is the MiCA, MICA it's called. I don't know what it stands for, but and the MiCA is highly restrictive in terms of what you can do. It mandates that you have to have euro denominated, you have to do KYC, you have a travel rule. So it's going to be a real shitty user experience. And ultimately, I don't know what the objective is other than to make it really hard for entrepreneurs to compete against the European CBDC, which they have announced, and which they want to launch, I think, in October this year, which is super scary.
All right, two more things, right? So this is same article. Since its October launch, World Liberty Financial has raised $550 million through 2 token sales, including $250 million announced last week. Blah, blah, blah. Sales have drawn 85,000 verified participants, high profile backers like Tron founder Justin Sun, blah, blah, blah. So what happens when World Liberty Financial raises $550 million? Where does that cash go? And what do they do with it?
I'm pretty sure now that they announced that they're issuing a stablecoin, I'm sure that 300 million of that will go to buy US treasuries or something to be able to then print USD ones into the marketplace and allow people to swap their dollar or set up an account with, World Liberty, right? So I can go and set up an account with World Liberty. I can deposit $100 from my JP Morgan account with World Liberty. I can then get stable coins associated with that, which I can then have a credit card against, which I can then use to go purchase an In-N-Out burger.
Got it. All right, Matt, why don't you pull up this chart of MSTR? Let's go there. Let's go that route. Yeah.
Let's say while he does that, it's like printing money without the inflation part.
Yeah.
That's pretty cool.
So Matt, I asked you.
You will have inflation because you're printing money.
I asked Matt,
you're creating. I mean, in the end, you're creating.
Let the guest speak.
No, dude. I mean, I need my time, bro.
It's collateralized debt obligations that are being created, right?
All right. So about 5 months ago, I said, Matt, who do you think Trump should elect as Treasury Secretary? He actually said Michael Saylor. Right, so Matt's a Michael Saylor.
I was joking.
You took that back. You take that back, yeah? All right.
No. I mean, that was a joke.
It was a good joke. Don't take that back. That sticks.
That's one of the things I wasn't supposed to publish on LinkedIn. You mean?
One of the many things you were not supposed to publish on LinkedIn. Yes.
All right, but having said that, so what do you think of MicroStrategy or Michael Saylor? I mean, so Stefan, this is to you. We're here talking about stocks. So, I mean, this is a segue to stocks. Any stocks in the sector? I mean, from miners to would you ever buy a miner? I mean, that seems weird. Like those stocks are all in the tank now. Or what would you buy if you were? Let's say you had 5 crypto stocks to buy. Would you buy any? Or you have any good names for us?
Coinbase. I'd buy Base. I think they are extremely experienced in this. They have trading capabilities. I think Kraken will do an IPO. They've acquired Hashnote. They have acquired NinjaTrader. So they're getting more available to retail markets. Very experienced in the crypto space. Kraken's not yet listed, but yeah, I think they will go out this year. MicroStrategy, yeah, you can buy MicroStrategy. I'd prefer to buy Bitcoin directly versus MicroStrategy, just because I can and I know how to do it. But would you buy BlackRock or would you buy MicroStrategy? Would you
Good
buy
point.
a BlackRock ETF, IBIT, or would you buy MicroStrategy? I don't know. I would prefer to just buy Bitcoin native and store that in my private custody, just mainly because you can. That's the advantage of digital gold. You can hold on to it, your keys, your wallet. But yeah,
What
I think
about
Coinbase is
Robinhood?
Robinhood, I would definitely buy as well. They've just acquired Bitstamp. Bitstamp is one of the oldest exchanges in crypto, so very experienced. They work very closely with BitGo. I don't know if BitGo is publicly listed, but BitGo is another big custodian in this space. They do custody for a lot of enterprise institutions. But Robinhood is definitely good. They did a whole bunch of announcements around AI. And so I think that's extremely interesting, helping you make investment decisions with your own agent inside the app. So that'll be really good.
Any feel on Trump Media and Technology, all the stuff they're doing to try to get into crypto?
DJT is somebody I would also get. Yeah, I think that's going to be, ultimately they're going to be really well positioned. They also,
I mean, that's what we just launched a 2x on this one. I mean, I think they've got a lot of potential here. We'll see.
Yeah, they just they're working with crypto.com. They are working with them to issue indexes, ETFs, and have those distributed through crypto.com. So they'll be the custodian and the wallet for those transactions. Yeah, I think those are all, World Financial as well is another one. Yeah, I think those are the 4 or 5 assets that I would hold.
Any
and I would
losers?
hold them long. I mean, I think they'll just go up with the industry, right? They're well positioned. They're in the market. They'll go up.
Any losers? Like, who are the losers?
I think
Piggy
traditional
banks?
finance. Yeah, piggy banks. I think banks that are not sitting on treasuries, right? I think unfortunately there will be a consolidation in the banking sector.
Right.
I definitely see.
So wait,
I don't know
all right.
which banks,
What do you think about the smaller regional banks then, with all that, all that we're talking about?
I think I think we now have a more favorable FTC, so acquisitions might take place. You might see bigger tech companies with all of their treasuries and their balance sheets, their cash positions, their liquid assets, go and buy a bank. Why doesn't Apple buy a bank? Why doesn't Google buy a bank? What's stopping them to buy a bank and then leverage their technology skills, their balance sheet, to then use the bank itself to try and scale that
And issue their own
business
stablecoin.
and get into the bank and issue their own stablecoin? Exactly.
Smart. I like that idea.
And then they'll have their own
Right.
blockchain, right? Why they can just fork the Ethereum and run it on their own blockchain and do all the settlements on there and have Chainlink do the integration between each one of them.
So
Right.
Apple and Napster can provide, compensation. I like
Yeah.
that.
Right. The Apple Napster analogy. All right, Matt. Anything else?
No, I mean, this was this was fascinating. I mean, it sounds like the entire financial system as we know it is changing based on these whole, all these stable coins. We just need to figure out, like you said, who are the winners, who are the losers. Go long the winners, go short the losers. So I think this is this is definitely something we want to revisit.
Let me ask you one more question.
Yeah.
Like I know timing, timing's like a big word, right? But what do you think the timing of something like this is? I mean, the reality is you could probably be buying stuff with JP Morgan coins. You wouldn't even know it. It's just on your credit card. It just goes in and out. It's not like you're taking out a JP Morgan, nickel with Napoleon's face on it or anything. It's you just you know, you just zip it in and out with your credit card, right? But so like, what do you think this? How long do you think this takes, or whatever? You know.
I think it'll come a lot quicker than we think. I think you'll see places like Robinhood. I mean, I think they will be formalizing the acquisition of Bitstamp, and they will have already, beyond the pool of crypto assets they have in there, they'll have a whole suite of additional assets, and they will issue together with, I don't know, whoever they're working with, Fidelity or Vanguard or whoever, they'll start issuing stablecoin as well. There'll be PayPal already has a stablecoin. So you're going to see a large, very quick rollout of, that's why I'm convinced in the next 2 years, this industry is going to grow 10x, just alone the stablecoin industry. And that's going to require settlement and gas fees and utility fees for using these ultimately far cheaper rails than Bitcoin, than Visa card and MasterCard, who, by the way, I would short as well, because unless they have a stablecoin strategy and a blockchain strategy, their whole position in the marketplace of having 60, 70% market dominance is gone.
So when you see Matt lean over like that, he's actually putting in an order. He just shorted like
No.
MasterCard, dude. I know
Something to
that's
watch
what he
with.
tries to do it real nonchalantly, but that's when he moves to the right, that's a signal I'm shorting. When he moves, he's buying when he goes to the left. He's kind of shorting when he shuffles over to the right. That's his tell. Like, that's his giveaway in Vegas, I heard, actually.
Yeah, that's why I was losing. You told them to watch out for that.
Dealer spotted you.
All right, guys. Thank you, Stefan, Matt, everybody, people.
Thank you, guys.